What do we think about Apple here? Is it getting up against some resistance, or do you think that has, bottomed out for the near term?
I think it's hard right now, right? I mean, I wouldn't be surprised to see it give back. I mean, even if production of the iPhone gets back up and running, you're talking about end of December into January. So this quarter already is going to be pretty poor in terms of the units of iPhone.
It was up today, by the way. Now it's turned negative, as you see. I wanted to bring it up because it was up in a down tape. Right.
Last week, people thought it would be a 6 million unit shortfall. Today, I'm hearing 1 to 2 million. I don't know what it is. My point of not owning a big chunk of this is because this was a stay-at-home beneficiary, right, from Macs and iPads and all that, right? And also, by the way, apps. Apps have really declined pretty dramatically in the last couple of quarters. And so for me, at 23 times forward, it just is not that compelling, Scott. I think... I have been in Meta. Of all the FANGs, it's the only one I own. It's been painful, but that one, at least I can get around the valuation, and I don't think much has to go right for that stock to recover pretty substantially in 2020.
How much has to go right, though, with Apple for the market to have the Tom Lee rally?
It's a good question. It's one we've been kicking around, right? And I was thinking about this today because the producers asked me what my thoughts are on Apple. And as I said at the time, I don't care. And think about this. I know I'm only one person, and I'm not trying to be provocative, but I sold half of my position 2 months ago. So I'm below the market weight by more than 50%. It's below an average position size for me. I've got it because, Steph, I think you'll agree, it'll be fine. Nobody's going to say it's a terrible stock. But is this where the leadership's coming from? No. Now, Scott, to your question, I know I'm only one person, but I'm telling you, I don't care about Apple. I wake up in the morning. I care about Boeing. I care about General Motors. I care about Wynn Resorts. I heard Joe grunt, so I'll let you give it to him. But I don't care. You know what? I don't think a lot of people care about Apple.
It means give you the ball, not give you the business.
Okay. All right.
Yeah,
well, I mean, and that's like saying the Kansas City Chiefs could win the Super Bowl if Pat Mahomes isn't the quarterback.
It's not like saying that at all.
Yes, it is.
It's a stock. It's a stock with 4 letters in its symbol. It's a stock. Forget it. It's not the market.
What percentage of weighting in the S&P is it?
6.5%. What's the rest? What's the rest of the weighting, Joe? Quick math.
Historically,
93.5.
Okay, whatever.
Go ahead.
So historically, the Apple to have a 6.5 weighting in the S&P. What other stock can we fall back on in the history of time and see that significant of a weighting? In addition, beyond that, if you tell me, and by the way, my opinion of Apple is that I think Apple is an example of a stock that made its low in the second quarter in June, retested the low in October, held above that low, and should be fine from here. It's also towards the end of the year. So you're probably engaging a little bit of a buyback right now with Apple as well. I wouldn't be surprised to know that as well. But if you tell me that Apple's going to fall back to the June lows, the market's not rallying. And if you tell me that Apple's just going to sit between 140 and 145, the market's not going to 4,400 or 4,500 or whatever number you want to pick.
93.5% of the S&P 500 is not Apple. So mathematically, the rest of the market can rally. By the way, I mean, let's just go to what's been happening the last few weeks. Dow Jones has been rallying. It's not because of Apple. Dow Jones has been kicking the snot out of the S&P 500 because the rest of the market, which was left behind in the last decade, is performing. Now, maybe it's $1, Joe, and you make a convincing case on that. But my case is still, I got you at 6.5%. Okay. Go back, hang on, go back 20 years ago. Go back 20 years ago. The market leaders there were the tech stocks coming out of the 1990s. They did not do well in the aughts, right? Microsoft did not do well in the aughts. Amazon didn't do well. All right, go ahead.
All right, thank you. Straight ahead, a changing tune on China. Appreciate that very much.